Hello everyone, in today's video I want to talk to you about what's actually happening to real estate prices across Canada and US. My focus is in Toronto and GTA, but this thing is actually happening right across the world. Ever since the pandemic, government made drastic measures to control the pandemic via a lockdown and economical shutdown. I'm not here to argue with you whether they made a right decision or not, but that's what they did. And that's what made the central banks to make massive actions and pump money into economy to keep it afloat while the real economy was shut down. So what did they do ever since the pandemic started? Well, let's take us back to March 2020 when the pandemic started and the stock market plunged and everybody thought we're going to enter into recession. Well, that didn't happen because government started paying out monthly income to the employees that were impacted and also bail out a lot of companies. This money that the government used wasn't in their bank account or it wasn't part of the tax collection. In reality, Government of Canada issued government bonds, which is a form of a lending, and Bank of Canada purchased those bonds on their balance sheets, and this way the currency entered into the economy and our government went further into deficit. The other thing that Bank of Canada, Federal Reserve of the US, European Central Banks, Bank of England, and all central banks all over the world are doing is quantitative easing, which is a form of money printing mechanism that pumps money into the economy via various measures such as buying mortgage-backed security, corporate bonds, and treasury notes. You can see from this article from Bank of Canada's website that they are still purchasing $4 billion a week, and ever since last year they've pumped $180 billion just with the QE. You add that along with the government deficit and now you're looking at a bigger number. In this chart you can see the overall money supply in Canada. You can see up to year with 2020 we had about 1.8 trillion currency in the system, and just last year that number went to 2.2 trillion. That's 22 increase of currency in the system. So now when you look at these numbers, you tell yourself 20% increase in real estate prices is not that crazy given the government pumped 22% more currency into the system. That's why we're seeing stock market is going up, commodity prices, groceries, everything is going up. And the increase in our money supply has definitely something to do with it. There are a lot of factors that impact real estate prices, but devaluating our currency has definitely something to do with it. By the way, this is no secret. If you go to the to the Bank of Canada's website, they tell you about all these programs that they're doing. So in reality, maybe our real estate prices aren't going up as much and our value of money are going down. Because this is what they're going to be, governments are going to continue be doing this, and they're going to continue to devalue the currency to further reduce their debt burden, because governments around the world are going into more deficits, so it's to their advantage to devalue the currency and reduce their debt burden. But this will impact the most the middle class who are wage earners and are saving money, because as you save money, the actual value of money will go down. And so it's important, in order to survive in this environment, it's important to put your money into an appreciating asset that appreciates over the long term as the value of money goes down. I hope you find this video helpful. If you have any questions or comments, I'll be glad to answer it. If you have a counter argument, send your comments or messages to me and I'll be glad to speak with you.